Good afternoon, stream. We are here today for Jerome Powell's last FOMC meeting. We have the rate decision going live at 2 p.m. Eastern Standard Time. It's overwhelmingly expected. In fact, if we look at the FOMC watch tool, it's 100% likely that we are going to pause rates today. It is not looking like we're going to do anything else. If we take a look at this, we have a 100% chance that we are going to pause rates today, according to the Fed watch tool. Now, is this perfect accuracy? No, but it's looking pretty freaking likely we're going to pause rates today in about an hour. Now, attention is then going to pivot to what Jerome Powell says. I'm assuming, I said this earlier, but I'm assuming the statement is going to say there's risks of elevated inflation. That's what I'm assuming here. So I don't know how much the markets are necessarily going to react to that necessarily, but that's what I'm assuming here, is that markets are not going to move too much. I'm assuming markets are smart enough to recognize that, because we're in this Iran conflict, we actually had breaking news from this, but because we're in the Iran conflict, Powell is going to stress inflation and fears of the Iran conflict and the unknown path for rates right now. I'm assuming that's what happens here. You can look really quick here and see oil right now, guys. So look at oil. Oil right above me is surging higher here. WTI crude is up to $107.26 today. If we look at Brent, I was looking at Brent earlier. Brent, honestly, is like pretty freaking ridiculous right now. Look at Brent. Brent right now is almost $120 a barrel for Brent crude. Like, look at Brent. So Brent has been going absolutely wild, absolutely crazy. And yeah, some of this is because we've had Iran kind of saying some stuff over the past few minutes here. Specifically, the Iranian oil minister said justifies rationing fuel consumption by the war conditions, he said. He said no internal concerns regarding the securing and distribution of fuel. Hegseth did decline on how many months he thinks this conflict is going to continue. And yeah, we've just kind of had back and forth here regarding Iran. Trump told Axios that oil storage facilities and pipelines in Iran are nearing explosion. Iran can't export its oil due to the blockade and wants a deal. We will not allow Iran to possess nuclear weapons. And because of that, oil is jumping right now. Look at oil jump here. So crude up to 107.5 for WTI crude. Again, Brent crude is up to over 119 right now as markets go down and oil goes up here. Something might have just been said too, because look at oil pump right now. Just as we're speaking here, let me see. Brent crude over 119, almost to 120. WTI crude, again, making some pretty wild moves up here. What's up, Jamie? What's up, F8? What's up, Mama Pawn? What's up, Sam? What's up, Saf Kaiser? Guy that knows. Blaze. Joshua. Good afternoon here, guys. Good afternoon. It is time.
What's going on, everybody? How's
Brent
everybody doing?
is here. Speaking of Brent, we have Brent here.
Brent is in the house.
Yeah.
So, do we see this trend continuing? I mean, do you think it's going to continue to go up, or eventually just start trending sideways? I mean,
well, it might run out of steam. This trend right now, which is due to recent catalysts. Again, Iran foreign minister speaking, Trump commenting on the Iran conflict. That's what's making markets move. They're also kind of getting front loaded into the potential FOMC decision. Now, we could move sideways and chop sideways leading into this event. It's very possible that happens, that we chop sideways leading into this event. During the decision, I don't know how much we're going to get from the decision in terms of reactions. We might get somewhat of a reaction. But I think most people at the Fed right now are going to agree that we should pause rates right now. I think almost everybody agrees. I know we had some guy say we were going to raise rates 50 basis points today. That's not happening. But remember, we have 12 voting members. There's all 7 Fed governors appointed by the U.S. president, and the New York Fed president are permanent voters. The remaining 4 voting spots rotate among the other 11 regional banks. But I assume most of the votes today are going to be for a pause. I can't imagine, except for maybe, we've had a couple dissenters in the last few meetings, 1 or 2 generally. Maybe they're still pushing for rate cuts. I don't think the labor market data that we've seen from ADP and the official labor report justifies a rate cut right now. But that doesn't mean they're not pushing for it here. That doesn't mean, they're not going to vote for they're not going to vote for a rate cut, even though they know we're not going to cut rates, basically. And so, yeah, it's interesting to see what happens. But I do assume Jerome Powell, and really in the FOMC statement that goes live right at 2 p.m., I do assume they're going to stress the inflation risks right now from this Iran conflict. You know, prior to this conflict, oil was at $55 to $60 a barrel. Now it's at 107. If we look at Brent, it's almost to 120 today. So the conflict is obviously raising the price of oil. I mean, this is pretty self-evident considering everything going on. But what it means is that the outlook for inflation is uncertain, is one of the big talking points. The outlook for where inflation goes, not just over the next month, but over the next year plus, depending on how long this conflict lasts, means that they don't know what to do. I don't think they're going to raise rates either anytime soon, not unless we get wild inflation coming from this. I don't think they're going to raise rates anytime soon, but I think because the path is uncertain, the Fed will be pausing for the, medium, future into this year, maybe into next year. If we look at the odds, I looked for a purple tie today, guys. I could not find one. Red is about as good as I could find here. They
say red is the poor man's purple, right?
It is, bro. Definitely in trading too. Red is not good. We did some votes on the poll. We got about 120 votes. 68% are hawkish today. 32% are dovish. And I'm assuming Jerome Powell is going to be hawkish today as well. I can't imagine Jerome Powell, with everything going on, with the labor data that they're getting, and I'm not even necessarily saying I believe the BLS data for jobs is accurate. I'm not even saying that. I'm not saying that. That's not what I'm saying. Don't get mad at me. Don't get mad at the messenger here. What I'm saying is that the jobs, despite the accuracy of the report, have shown strength in the labor market over the last 60 to 90 days, I would say. The ADP reports have been strong. We got another ADP report that showed 40,000 jobs gained yesterday. The non-farm payroll unemployment report, which we get another one next week, but that previous one showed strength in labor, much stronger than expected, kind of shocked markets. Jobs have been strong. Unemployment stayed about the same. I do expect Powell to stress the inflationary aspects of the Iran conflict, but I do not expect him to pick a base case. I do not expect him to push a rate path. Walsh did get voted in today, so he cleared one of the procedural things that he needed to get put in as the Fed chairman. Next is the vote on him as the Fed chairman, but he did get the necessary votes in the Senate today. And so something that I made a short about, and something that we're also going to be really focusing on today in terms of whether Jerome Powell comments on this, is going to be, does Jerome Powell give up his board seat in the Fed, even with Walsh stepping in? If you're a hawk right now, and you want a hawkish Fed, and you fear inflation more than, recession risks, you might want Jerome Powell to stay on as Fed governor. He gets a vote. It means it's a little bit of a hedge against dovishness, because Walsh is stepping in, and Walsh is seen as overwhelmingly dovish. And so, that's going to be one of the big things that I think might influence markets today. And that's not even including the major earnings cycle that we have going on after this Fed meeting today. We have Microsoft, Amazon, Meta, and Google earnings all releasing right around 4 p.m. Eastern Standard Time today. And so if the Fed meeting doesn't shake up markets, that earnings release is certain to, in my opinion. Just considering all the aspects of everything, this is a really interesting day for markets. And that's not all, folks. Tomorrow, we have PCE inflation for March, which is when this conflict started. And the PCE, the Personal Consumption Expenditure Index, is what the Fed uses to gauge inflation. And so tomorrow at 8:30, we get PCE inflation. Again, this is what the Fed uses to gauge inflation. And we get Q1 GDP. And so if Powell's hawkish today, we'll see if it's justified with tomorrow's data showing what GDP looks like. This is too sad. Goodbye, Powell. Thanks for all the memes over the years. Will gold dump? Gold is going to want low interest rates. And so gold is going to be influenced by interest rates. If Powell's super hawkish, gold might dump. If Powell was super dovish, gold might rip up. That's what I would look at for gold, silver. Gold more than silver, but silver nonetheless is more dovish Powell. Gold might run. More hawkish Powell, which I think is the more probable thing, especially versus dovish. I think he's going to be neutral, but I think there's a greater chance he's more hawkish than dovish. So in that context, gold might go down. You never really know. It depends on market's response here. Yeah.
Correct me if I'm wrong, but wouldn't this be the third consecutive pause in 2026 if they do pause rates?
Yeah, the last time they paused was December.
Okay.
and it happens every 6 weeks. So that sounds right. We haven't
Is
paused. We haven't done anything but pause this year. We cut rates 3 times at the end of last year. We haven't paused since December. Or we haven't cut rates since December. That was the last time we did anything besides a pause. We've kept rates basically the same. Another focal point is today we do not get the summary of economic projections and the dot plot data. So we do not get the SEP. We do not get the dot plot data. And so, yeah, we don't get any of that stuff. So...
Now, had we gotten the dot plot data, I mean, like, what is the significance of that?
Well, the dot plot is basically economic projections by the Fed. So we will see where the Fed members think inflation, think rate cuts are going, inflation, and more. Last time, they basically are expected to keep rates the same for an indefinite, like an extended period of time. Again, because there's so much unknown about this Iran conflict that we're in now, most of them are expecting that rates are going to stay the same for an extended period of time. And I agree. Go ahead.
I was just going to ask: is it a common trend? I mean, is it a particularly common trend to pause rates, consecutively like this, or does it not happen super often?
So most of the time we pause rates, we cut towards the end of the year. Generally speaking, at least that's how it's especially been over the last few years. 2024, we cut rates 3 times. We did a 50, 25, 25. So we cut rates. I think it was in October, November. No, it was September, October, and December in 2024. And then I think last year we cut rates 25, 25, 25. And I believe it was September, November, and December last year. But either way, we usually, especially the trend we've been setting, is we cut rates at the end of the year. And speaking of that, if we look at oil still spiking up, guys. So oil is still jumping up right now. Look at oil make this move up. If we come over here to the NASDAQ, or the S&P is kind of slowed down a little bit. It's not really doing too much craziness. The S&P kind of slowed down. But oil, guys, if we look at it right here, is still jumping up. I'm John the Weatherman today. This is what I decided to do. But oil up to 107.5s. And again, I think markets are also pricing in when Brent crude is going to hit 120.
At the beginning of stream today, like 103 or 104?
Yeah, we're up. No, yeah, that's right. We were at probably 104s when we started the stream, give or take some of that here. So yeah, that makes sense. 104s, 105s.
Okay.
Yeah. John has Trump on speed dial. Yeah.
So, I mean, other than his dovishness, I mean, what do we know about Kevin Walsh, like his background?
So Kevin Walsh, his main belief is he's kind of he's pro interest rate cuts, but he's less friendly towards quantitative easing and money printing. And in some ways, he's correct in that QE and money printing can drive inflation at a much more profound rate than just basically cutting interest rates. So Kevin Walsh wants us to cut interest rates. I believe Trump put him on, so I'm assuming he's going to be super dovish once he gets into the Fed. It doesn't mean he's going to really have that much sway. It's still a democracy, so to speak. Like, they're still going to vote on where rates are going, and he's just one person. But the Federal Reserve Chairman does have more influence over them. It's their job to get things done. And so I do believe under Kevin Walsh, we're going to have a more dovish outlook. But, I think we might see more rate cuts under Kevin, less money printing, if that makes sense. He was really critical of the QE we did in 2020. He was really critical of the QE we did in 2008. And just to put this into perspective for everybody that might not understand this at home, quantitative easing is a form of money printing, basically where the Fed expands their balance sheet by buying up bonds and MBSs and other assets. Again, this expands their balance sheet and injects liquidity into those markets and ultimately helps bring interest rates down. It's a more desperate thing, though. So they usually do quantitative easing if something is looking really risky in terms of the economy. So like 2020, they did it. 2007, I believe, or 2008, they did it as well. But again, it can cause more profound inflation. And so those are the risks. Basic rate cuts can spike inflation. There's risks to it. And again, the basic logic of this is that when interest rates are low, businesses expand, people spend more, and it stimulates the economy in that regard. When interest rates are high, the economy's kind of pushed down a little bit. They spend less, businesses expand less, and ultimately it helps inflation go down. And so that is the logic of raising interest rates. And this is what the Fed calls their dual mandate. They want to control prices in a way in which inflation is not crazy amounts of risk in inflation terms, and they want to keep the economy stable enough to where the labor market is strong on the other end of it. And so, yeah, that's kind of where we're at now. Kevin Walsh, did you have a history of Kevin Walsh that you were reading? You want to read the history of Kevin Walsh, Britt?
Yeah, sure. It says here, Kevin Walsh is a veteran Republican-aligned economist and former Fed governor who has been nominated to serve as the next chair of the Federal Reserve, succeeding Jerome Powell in May 2026. His background, ideology, and prior record suggest a moderately hawkish, institutionally skeptical view of the Fed, but with a clear tilt toward greater easing in the near term to align with President Trump's policy goals. Sure. It says here that he served as a governor of the Federal Reserve Board from 2006 to 2011 under Ben Bernanke, deeply involved in the response to the 2008 financial crisis. Post-Fed, he has been a senior fellow at the Hoover Institution, a private equity investor, and an active commentator on monetary policy and financial markets.
Sure. Yeah. No. That all makes sense. And again, I think under him, most markets expect us to be pretty dovish today with everything going on. Or no, most markets expect him to be pretty dovish once he steps on as governor. And so once he steps on as governor, I do expect markets are going to be a little bit more dovish. But I don't think we're going to get rate cuts anytime soon, even with Kevin Walsh. I think not until the conflict ends and oil starts returning back down to normal. I think the inflationary aspect of everything going on is simply too risky right now. It's just simply too risky.
I was just going to say, I tend to agree with you. Yeah, I mean, it says... like I said, he's appears to be a very inflation conscious type of guy, and he's been very critical of quantitative easing, like you said, and apparently mission creep is a very big thing for him.
Yeah, for sure, 100%. He doesn't want high inflation from quantitative easing, and so yeah, I 100% believe that. Just to put this into perspective, mission creep, if you don't know what it is, it's when organizations, specifically central banks or government agency, expand their goals and activities beyond their original authorized mandate, right? So this basically means they're getting past the scope of their duties and what they're doing here. So, and that makes sense why Trump, again, who really disagrees with the Federal Reserve, would put him on. And so, yeah, we'll see what happens, guys, but it is coming very soon here. Again, we do have the FOMC decision live. Let's see what happens here, though. FOMC decision is going to be important, but what Jerome Powell says is going to be more important, chat. Just to put this out there. And so be ready. We do have, how much time we have left? 42 minutes, 41 minutes? Yeah.
42.
Yeah, for sure.
What are the potential, ramifications or fallout of his statement, you think?
Well, you want to focus on what Powell says regarding inflation. Powell, I think he's going to stress inflation risks from this conflict. I just think that's something he's going to do. I think he's going to stress inflation risks. He's going to talk about the risks to the inflation side of the dual mandate. I think the labor data, if we take a look at the NFP graph that we've seen here. So here's non-farm payrolls. And so one of the things that we're seeing, at least last time, it's been going back and forth, but here's non-farm payrolls and kind of a graph for this. So here's the non-farm payroll report. The last time we showed up at 178K for March for payrolls and jobs, 178,000. That aspect of it, I think, because of that, he's going to say jobs have been resilient, is what Jerome Powell is going to say, I'm pretty sure. The previous one was negative 133,000 though, and so, we do have some justification in risks, but it's been kind of skewed here. If you look at these last 3 months of NFP data, it's been kind of skewed. We had a really big month here where really it's like every other meeting it goes from positive to negative, and that case has been here since June of 2025, really since May of 2025. May 25, 13,000 positive, June negative 20, July 64 plus, negative 70 August. 76,000 plus, negative 140,000, 41,000 plus, negative 17,000 in December, 160,000 in January, negative 103,000 in February, and then in March it was 178,000. And so if I was a predictor here, this is almost like an expanding thing. maybe after this next one, we'll get a super negative one of like negative 200,000 and markets will just freak out. Again, unlikely, but because of this positive 178,000 jobs for March, I expect him to say the labor market is resilient today. I do expect him to say the labor market's resilient, you know, there's not a lot of risk there, like we're good basically, you know, so inflation's risk, we're going to be hawkish, but because of the inflation path moving forward is being unknown, we're going to pause rates for, you know, and we're going to take it meeting by meeting is what I assume he's going to say. But just going back to it, guys, a focal point needs to be on whether he gives up his board seat today. Whether Powell gives up his board seat is incredibly relevant. Incredibly relevant.
That's what I was going to ask. Are there any odds on that?
Yeah, so right now the odds are, and it doesn't necessarily mean today. Like we were looking at this earlier regarding Jerome Powell. But right now, if you look at like Polymarket as an example here, let me let it load. It's almost down. Hold on, let's see. Yeah, last time I looked at it, it was like 60-40 Powell would give up a seat. I don't even see this around anymore. Hold on.
All right.
Yeah, but if we take a look at PCE inflation, which is what the Fed uses to gauge inflation, like I said, we get another one tomorrow. But the last PCE inflation report, month over month, was released April 9th. It showed February at 2.8%. So we're still not around 2% for PCE inflation. The Fed looks at core PCE. So that's one to look at. But we do get that data tomorrow with quarter one GDP chat.
Well,
Are the what minutes?
What did you say?
Trent. So Trent says, are the minutes in 8 minutes? The Fed minutes report is not today. Yeah, okay, so I found it. So Jerome Powell out of the Fed board. Here it is. Jerome Powell out of the Fed board. There is a 38% chance that he is out of the Fed board by May 30th. Right? So remember, that's 30 plus days away. There's only a 38% chance. There's also a 81% chance that Powell stays on the Fed board. Or no, I'm sorry. There's a 38% chance that he's out by May 30th. So it's unlikely he's going to announce his departure today is what markets are pricing in. But at the same time, there's an 81% chance that he's out of the Fed board by this year. I think his term on the Fed board would expire in 2028. I'm pretty sure that's what it is. His term expires in 2028.
Do you remember this, what you said earlier in the day?
Yeah. And remember, this board seat is relevant because it influences where we go monetary policy wise. If he stays on, then what that means is that the Hawks might have an extra vote.
He can try to balance out Walsh, basically.
Right. Exactly. Markets like to say Jerome Powell is some big hawk. I don't necessarily think that. He cut rates in 2024 right before Trump took office 3 times. And so it doesn't necessarily benefit anybody. There's a lag effect to it. And then when Trump was in office, he did the same thing. He cut rates 3 times at the end of the year. So that seems pretty balanced to me. People dislike Powell. They make it really political. But I don't necessarily disagree with most of Powell's moves. Did we ease too much in 2020 is going to be one of the big criticisms that people have regarding Jerome Powell is, did we ease too much in 2020? Like 2020 happened, the labor market shot down, the economy tanked, there were lockdowns and all this different stuff. And so we came in and we kind of super eased. We brought rates down to 0. We printed money through quantitative easing, QE. And, you know, that mixed with a lot of the other conditions of 2020 made inflation spike. You know, we had supply chain problems during that time. We had stimulus checks. We had super low interest rates. We had money printing and quantitative easing. And so the net effect of that was for years and years and years following it, inflation was a problem. Now, maybe you could criticize Jerome Powell for that, but at the same time, I've said this a million times, I'm going to say it again. If we did not super print and ease, people would say we're not doing, that he didn't do enough. And so it's kind of a damned if you do, damned if you don't scenario in that context here.
Also, I mean, and unless I'm wrong, we also had a pretty severe stagnation in the job market. I mean, the employers had a very hard time finding people to work for them during that time period.
No, 100%. Absolutely agree. So it's been tricky. It's been tricky. It's not easy. And yeah, again, we'll see. We're still dealing with the high inflation problems. A lot of people think inflation's super high, but again, if we look at a CPI inflation graph, it's really not that. I'm not saying it's good, but what we had to do is we had to raise interest rates a bunch afterwards. We raised rates like 500 basis points following 2020. And so again, here's CPI. This is where we are now. After this conflict, we're up to 3.3% for CPI. And I'm sure we're going to see some increases. PCE inflation tomorrow. It's supposed to release tomorrow. Core PCE is the relevant one, but it is expected at 3.5% for headline and 3.2% for core. Core excludes energy, though. So it excludes the first round effects of this Iran conflict. If we look at like what's expected. So again, they exclude food and energy in core.
Yeah.
But there's still secondary effects of this conflict, so there's we're going to see raised airline prices because fuel is more expensive for the airlines. Like, we're going to see the secondary effects of the inflationary conflict on this. But again, 3.2% expected for core, which is a jump of 0.2% versus the last one if we show up as expected. And then 3.5% is expected, which includes oil, right? So that 3.5 jumping up from the previous 2.8 is from the Iran conflict and the huge, crazy prices of oil right now. So there will be always manipulation. Yeah, no, 100%. I mean, there is always manipulation in one way or another. There's always insider trades. There's always manipulation. It's the nature of the stock market.
So it's believed that a Walsh-led Fed could lean more heavily on forward-looking indicators. What do you think about that? Like, rather than waiting for hard inflation or unemployment data to move.
Here, sorry. Hit the like button, guys. Hit the notification bell. I am making the post right now on our X.com page at Beginner Trades. Give me a follow. Come join us. And we'll see what happens. But yeah, will Jerome Powell leave his board seat is the question I have. All right, so what's the question, Britt?
Oh, I was just saying, it looks like a lot of people believe that Walsh-led Fed could lean more heavily on forward-looking indicators as opposed to waiting for hard inflation or unemployment data to move. And I was just wondering what your thoughts were on that. Like, leaning more specifically on like financial stability signals, productivity trends, and expectations rather than hard data.
Yeah, I mean, I think that's absolutely true. I think he could look at, instead of looking at lagging data like month-old jobs reports and stuff like that, he might focus a little bit more on other stuff. We'll have to wait and see. He says all the right things now because he wants to get confirmed. And maybe he just goes super dovish. I think Walsh being a dove means that he wants to justify being a dove. And the way you justify being a dove right now is you ignore the labor data. Again, he's going to say it's inaccurate, and maybe it is. Again, we've definitely seen some big revisions up and down. When the labor path or the labor data that we have here, let me see if I can find it again. Where'd it go? When the labor data we have looks so skewed like this, it's hard to say it's not. It's hard to say it's accurate. Because
I agree. I mean, I've honestly followed that over the last 6 or 7 years, and it seems like not every time, but a lot of time they get revised by half, right. Like revised down.
Yeah, especially the Bureau of Labor Statistics data. So that is the BLS produces non-farm payrolls, they produce CPI inflation, they produce PPI inflation, and some other stuff. But the Bureau of Labor Statistics, there's a bias that they have as well. But when the labor data looks like this, I can't say that path is necessarily wrong. Like, we're just going up and down too much. There's a lot of revisions here in the data that we're seeing. If we look at, again, CPI inflation, people could say the same thing. But
yeah, no, I get what you're saying. I kind of wonder though. I mean, like, if the Fed under his watch does lean more heavily on forward-looking indicators as opposed to data, I mean, is that a positive or a negative, or is it just, or could it be a little bit of both?
It could be a little bit of both. He's definitely gonna look at the labor market. So he, again, he wants rate cuts right now, and the way you argue rate cuts is you ignore the last NFP report.
Okay.
So, yeah, rates have been sitting at 3.5 to 3.75%. Inflation has been popping higher here. But here's the CPI inflation graph here, this last jump was from Iran. So if you look at this graph right here, this last jump was from Iran. We were at 2.4% prior to this conflict. And I've said it once, I'll say it again. Prior to the Iran conflict, I might argue rate cuts. Now I'm kind of hands off here. I don't want to mess with rates. I think you should just leave them where they're at. Now, I know certain people want low interest rates. I know people are pushing for different things. But me personally, I think that we should pause rates, and most people do as well. And if we look at the odds for that, like if we take a look at the Fed Watch tool, here's the Fed Watch tool. Here's June. Okay, so here's June. If we look at it, let me make it so I'm not disappearing like Back to the Future guy. But yeah, so we're at 98.6% likely that we're going to pause rates next meeting. Not today's, but next meeting as well. We're currently at 96.8%. There's only a 1.4% chance that we cut interest rates 25 basis points in the next meeting. Now, maybe people are pricing in Walsh stepping in and Hawks getting pushed aside for the Doves, with Walsh stepping in, and maybe that's a smart, bet here. We'll have to wait and see. If we look at July's meeting, we have a 5.4% chance of a 25 basis point rate cut. So 5.4% chance of a 25 basis point rate cut in July. If we look at September's meeting, September, it only goes up to 7.2% likely that we're going to cut interest rates. Still pretty low probability, and a 93% chance that we are going to keep rates the same all the way through September. And the big question, chat, that I have for you guys is, it depends on how long this conflict lasts. Even if we look in October, it's the same thing. In December, it's the same thing. So the odds for the rest of this year so far, and maybe today's report will influence these, is that we have a 4.5% chance of a 25 basis point rate hike. We have an 88.5% chance of a pause for the rest of this year. No rate movements outside of, or for the Federal Reserve for the rest of this year. And we have a 6.8% chance that we cut rates one time this year, probably towards the end of the year. A 0.2% chance we cut rates twice. Again, pretty low freaking odds. And so that is what we're looking like here. But
yeah, do you think it's just to give the economy and the markets a chance to stabilize?
Probably. It's just because we don't know how long this conflict lasts, is the reality of this, right?
So
like we don't
want to introduce another variable into it. I don't know.
Right. Well, we don't know how long this conflict lasts. The Fed doesn't know how long this conflict lasts. And so while this conflict is going on and inflation's still a huge risk, that's what people are nervous about. That's what markets are scared of. And if there's no reason to lower interest rates if inflation is going to be a huge concern. And even if this conflict ends, the outlasting effects of the Strait of Hormuz and the oil price situation is relevant. That's a relevant topic here for sure, is what happens with all of this stuff going on. Like what happens with everything going on right now, very relevant. And yeah, I don't think the Fed wants to make the wrong decision there. I don't think they want to, push too deeply into, interest rate cuts or anything like that, just because of what's going on right now is the real issue. So
okay,
this conflict will last until rates are cut. We don't need Iran oil. Rate hikes are coming. If the dollar dies, do you really want to be long in the Dixie? Who's buying oil from Iran? Powell and Walsh will continue to do whatever kicks the can in the market. They want no volatility. Yeah, I agree. I think Powell is not going to want a ton of volatility from everything going on. I just don't think he wants it, So we'll have to wait and see, but I don't think Powell... I think Powell fears leaving a bad legacy as well. So I don't think he's going to... I don't think he's necessarily going to... shock the markets. People always bet on these wild outcomes for FOMC meetings. Look, dude, if it's 99, 80, 95% likely we're going to pause rates, we're almost certain to pause rates. And so, yeah, we'll see.
Yeah, I tend to agree with that.
Yeah.
What's the market doing as a whole right now? Like, where are oil and the Nasdaq?
Oil is pulling back a little bit. Oil is now back down under 107. It's at 106.70s here. So oil is back down under. It's at 106.70s. I don't know what we're gonna get here though. I think it's right now. It's such a news-driven market. Markets are moving so much on news. And so I'm nervous about OPEC Plus. I do see some news coming out that maybe is driving oil down. OPEC Plus is likely to approve an oil production quota increase at Sunday's meeting without the UAE's participation, with quotas expected to rise by 206,000 barrels per day minus the 18,000 BPD share of UAE. Apparently, Putin and Trump spoke. They discussed Iran, Putin voicing support for Trump's decision to extend the Iran ceasefire and putting forward ideas that the Iranian nuclear program, while the two leaders explored potential for joint economic and energy projects. So basically, Putin saying he supports Trump here. And again, we'll see what happens here. NASDAQ is still pretty freaking sideways and choppy. So we will see what happens. But markets are nervous right now. They're nervous.
I wonder if that OPEC, possibly or likely approving a decision to increase the production quota. I wonder if that is to kind of counteract or just to kind of troll the UAE, who is leaving for the same reason.
No, that makes sense. They're trying to appease, considering the UAE left because they weren't allowed to produce as much, or they weren't allowed. Yeah, that's what it is. They're just trying to pander a little bit now that they're getting some kickback, is what it sounds like. The S&P 500 sitting at 71.5s right now. Again, the SPY here, guys, is sitting at 7/10. And the FOMC decision is in 23 minutes. Again, widely expected to be a pause today. But
what are the how close? How close to the all-time highs are the S&P and the SPY?
S&P right all-time, the SPY all-time highs is basically we hit this 2 days ago at 7:15s. Now the SPY watches the S&P 500 futures contract. So the S&P 500 futures contract, or the S&P really, is sitting at 71.54 on the S&P futures contract. The actual S&P is sitting at 71.23, and the actual all-time highs is 71.78. So depends on which one we're looking at. The actual S&P all-time highs are 71.78. We're at 71.20, so we're pretty close.
Okay.
Also, do me a favor, guys. Hit that like button. Hit the subscribe button. Hit the notification bell. We appreciate it. And, yeah, let's see what we get for this FOMC meeting.
We definitely do. Show the love, please.
Yeah, do it now. Trump.
That was a little good cop, bad cop. Please, and do it.
Was I too demanding with that, guys? Let me know in chat right now. With that said, are you bullish or bearish on this meeting? Chat. Are you guys bullish or bearish on this meeting?
That's a question I was going to ask. What do you think?
Yeah, and it's different from hawkish or dovish. Bullish just means you think the market's going to go up. Bearish means you think the market is going to go down. Hawkishness means restrictive Fed, and I think they're correlations there for sure. But bull or bear, let me know in chat right now. I see bear, sheepish. Sheepish is probably the right move. Quat says bear. Mr. Edge says bearish. Roll One says bearish. Hit says bull. Bog says ultra bear. Alex Hernandez says bullish in the chat. Your best dream says bull. Meeting is a nothing burger in the market barcodes. I disagree. I think there's going to be a couple things that matter for this meeting that are going to be relevant to pay attention to for sure. I don't know if it's going to move markets. I mean, we're almost certainly going to pause interest rates, and so we're almost certainly going to pause interest rates. But realistically, attention always pivots when something's overwhelmingly likely, unless there's a rate decision. But attention is going to pivot to what Jerome Powell says, and I think he's going to be I think he's going to be neutral to hawkish. Chat, neutral to hawkish. Sorry,
going in.
Yeah.
I don't know what I was going to say now, honestly. I was going to say I profess far too high of an ignorance level to really make a guess on bear or bull going into this meeting. But I was curious what your thought process was and why. Like what do you think and why?
And regarding what?
Whether it's going to be
bullish or
bearish? Yeah, going into the meeting. Yes.
I think markets are probably pricing in slightly hawkish to neutral Powell. And I think that makes sense, right? I think markets are probably pricing in slightly hawkish to neutral Jerome Powell. I think Jerome Powell, since the last FOMC meeting, and this is, again, something we have to go by, is since the last Fed meeting, we've had stronger labor data, like more resilient labor data, as well as, we've had the Iran conflict continue and escalate more. And so I think both of those things leans more towards a hawkish / neutral Powell. Markets are already pricing in a pause. Everybody knows we're going to pause today. But what happens during the press conference in terms of what Jerome Powell says is going to guide it. And I do expect him to be hawkish / neutral. What that means is that if he comes out dovish, less fearful of inflation, less worried about it, maybe markets react positively and they rip higher. I don't think that's going to happen. But, we had a really weak labor report prior to last month. And so maybe he acknowledges the risks to both sides. And he's more dovish than expected. Markets push up. I expect that less. If he comes out hawkish, if he's more hawkish than expected, markets will probably go down. They'll probably go down. Gold and silver will probably go down. Yields will probably spike, obviously. And yeah, that's what I expect here. But we do have a bunch of Mag 7 earnings right after the closing bell today. So the FOMC is important, but we do have a number of pretty significant Mag 7 earnings after the closing bell. We have Meta, Google, Amazon, Microsoft. Microsoft's been in a slump too from software. That's right after the closing bell today. So right now it's almost 2 p.m. market time. These numbers come out at 4 p.m. And so right after the FOMC meeting, we're going to have big earnings drop basically within 45 minutes or 50 minutes after the FOMC meeting. And so that could cause markets to chop even more. Let me know what you guys think in chat, what the outcome of this FOMC decision is going to be on markets. Again, let me know in chat right now. I see a lot of bulls in the chat. Boo, John, boo.
Boo.
Booby, why am I getting booed in chat? What did I do here? Did I do something?
Boo this man.
Boo. Whatever they do, big tech earnings will cause the opposite effect to balance it out. Maybe that's true. Fading into the back, bearishness, neutral to slothish bear, gold bear, mega ultimate bear, pig, bearish bear, meaning is nothing.
I don't get the pig comment.
There's a very famous quote, Brent, in trading, and it goes, bulls make money, bears make money, pigs get slaughtered.
Oh.
Basically, like, greed is bad. It's the opposite of
Okay.
Gordon Gekko. Basically, don't be greedy. Don't be piggish, is the quote.
I feel like most things somewhere in the middle is probably the way, the place to be.
I try to not be too biased to one side. I think I'm a little bit more bullish than bearish. But I think if we're in a downward trend and it's obvious, I like bear setups a lot more too. It just depends. Bear man.
Well, yeah, you try to recognize reality,
Right, exactly. Yeah, 100%.
So if I've been reading that Walsh is advocating rate cuts now. Is that true? I mean, is that confirmed or true, or do you know?
I mean, that makes sense. I mean, you got to understand, Trump just appointed him, so he's going to be saying he's going to be saying what Trump wants, right? And what does Trump want? Trump wants rate cuts. He's been arguing with Jerome Powell basically back and forth. They're like an old married couple for a year straight now. So Trump wants rate cuts. Trump just chose Walsh. And so Walsh, in that regard, is going to want rate cuts. Now, maybe you could argue it. I think the Iran conflict definitely puts a little bit more of a pickle in that term in regards to all that stuff. But that's basically the logic, is that he's going to do what Trump wants right now, and that's pushing rate cuts. What's up, Faye? Dan? Yeah, Trump did elect Powell.
You can say, well, on the plus side, if he does, I mean, that's should bode pretty well for gold and whatnot. I mean, people who are into metals.
Sure. If Walsh steps in and he gets overwhelmingly dovish, which some people do expect, that is better. But again, it's not just Walsh in there. Walsh is just one member. Now the Fed definitely has more sway, but there we go. I'm trying to get rid of the blurriness of my.
Absolutely. Yeah. I mean, if he does cut rates, or if rate cuts do happen, I know he's not alone in it. Does anybody in the chat or anything have any idea what that means for crypto stocks and like Bitcoin and other things?
Yeah, well, crypto stocks and Bitcoin are generally pro easing. They want lower interest rate environment. They're kind of like gold, right? Like they're going to go up with low interest rate sentiment, dovish sentiment. They're going to go up, or they're going to go down a lot of the time with hawkish, restrictive sentiment by the Federal Reserve. And so looking at Bitcoin today, here's Bitcoin right here. Bitcoin at 76,250. And so it is down a little bit. And maybe this is markets just pricing in a more hawkish Jerome Powell. It could be that maybe markets are just saying, you know what, Jerome Powell might be more hawkish than expected today because of the inflationary aspects of everything going on. And so because of that, we're going to get nervous and sell. They also could be pricing in big tech reactions here, you know, so big tech does move from all this stuff. And yeah, we'll see what happens, guys. We'll see what happens. But markets are nervous.
I guess decidedly so.
When do we cut rates next, chat? Here's a question. When do we cut rates next? I don't think we're cutting this year, personally. Not unless we see deep weakness in the labor market. But when do you all think at home we cut rates next? I'm going to go with... I either want to go with December or maybe like March of 2027.
You don't think
maybe December.
Cut rates once the Iran conflict is over?
I mean, I don't know. I think we could, but I think the Iran conflict is going to make inflation risks too concerning. Now, Walsh is stepping in. Maybe he gets the Fed together, you know, rallies them all together for rate cuts. That's possible, but I'm not sure. I'm showing December. Yeah, most of you guys agree with me. December, maybe early 2027. I don't think it's going to be September unless Walsh really steps in super, you know, super dovish. And again, I think he is dovish, but I don't know if he's going to be able to convince everybody else to be either.
Well, I was going to say, I especially wonder. I mean, if Powell stays, stays on the board, if he could sway him at all, anyway.
Sure, right, yeah. If Powell stays on the board, it's going to be more likely that we're going to have hawkishness. Yeah, and so if Powell stays on the board, we'll see. But again, if Powell exits, it gives the Trump Fed board a majority. So if Jerome Powell leaves, Donald Trump would gain a majority on the Federal Reserve. Again, just to put that into perspective, which means more Duffs. Jerome Powell and Trump have disagreed on a lot in terms of interest rates. Trump wants rate cuts. Powell wants to wait and see. Again, Powell is the only current governor appointed by presidents of both parties, first by Barack Obama and then as chair by Trump, and then later reappointed by Biden as well. So Trump appointed Michelle Bowman and Christopher Waller and is expected to fill another seat with Kevin Walsh, but time will tell what happens there, guys. Time will tell what happens. The S&P is starting to rise back up into this FOMC decision in about 12 minutes here. So we are starting to get some moves up here. But this should get interesting here, guys. This should get interesting. Again, the decision matters. The decision matters. But what Jerome Powell says, number one, in the statement here, if we look at the last statement, right? So this is another thing to watch for this meeting. If we look at the last statement here, the last statement generally stresses one or two things. Look at S&P pop up. So here's the last statement. Let's see, this is 2026, March. Here's the last statement. Again, the last one said available indicators suggest the economy has been expanding, job gains have remained low, and unemployment has been little changed. The implications of developments in the Middle East for the U.S. economy are uncertain. And so this is basically them saying things are uncertain. Look at the market jump up real quick right now. So the market just popped here, guys. The market just popped up big. Look at this move.
Is that news-based?
I'm not sure here. We're at 71.28 on the S&P right now. Let's look at oil. Oil fell down a little bit. Maybe it's not as big as we expect, but oil is down a little bit here. So let me check breaking news. But yeah, with that said, when this next statement comes out that's similar to this, I expect them to stress inflation risks. You know, I do expect them to stress inflationary aspects of this conflict and all that different stuff going on. And so, let's see here, guys. Let's see.
This is 5 minutes ago from Bloomberg.
Yeah, we still got a little bit over 10 minutes before the data releases here. We got about 1,000 people here. Y'all hit the subscribe button, hit the notification bell. We appreciate it. Again, it's overwhelmingly expected that the Federal Reserve is going to pause interest rates. That's not the big thing. The big thing is what Jerome Powell says, what the statement says, where the stresses are in the economy. This is not the SEP Summary of Economic Projections date. This is not the Summary of Economic Projections where we get a more detailed look at where the Fed thinks the economy, markets, and inflation are going. But it is Jerome Powell's last FOMC meeting, probably. So yeah, point is, this is relevant. Let's see what happens. We're popping higher here, though. Yeah, we're up to 71.27s right now. 71.27s. Jerome Powell, goodbye. Yeah, everybody tell him goodbye. This is his last FOMC meeting. We did not get a semi-annual monetary policy report with Jerome Powell today, so it's going to all pivot to what he says during the press conference today. We're going to pause today. Will he give up his board seat? Will he talk about when he's going to make that decision at the very least here today? And again, this is almost certain to be Jerome Powell's last FOMC meeting. And so, very interesting right here. Again, oil's now dipping down. You can see oil at 106.40s for WTI, for CL futures here. Bitcoin is, looking rough here today. Bitcoin is looking rough. And yeah, we'll see what happens. But it's the end of an era. Powell is going to be gone after today. And Walsh is going to step in. And we'll see if Walsh can bring us good things. We'll see if Walsh can guide the Fed. I know a lot of people are not very happy about it, but we'll see what happens with Walsh. Will he wear a green tie? Honestly, that would be a crazy move by Jerome Powell. If he came in without a purple tie, if he wore a red tie or a green tie, that would kind of be a crazy move here. Kind of a wild swing for Jerome Powell. Going out rebellious, I would say Jerome Powell is going to do here. Maybe he raises rates to a full point just to give Trump the middle finger. No, he's not going to do that. He's not going to do that. He can't do it alone, and he would get so much kickback from the other FOMC members. He's just not going to do it. So, yeah, we got news just now that the Pentagon is going to send the Ford carrier home from the Middle East, according to the Washington Post. So,
oh, well, that's most likely good news, I guess. I mean, it seems like it. I think the Ford is the largest aircraft carrier we have. It's in its own class, I believe.
Yeah, he's sending it back from the Middle East. We don't know the context of it, but yeah, we do see that happening. And here's the S&P 500, guys. Here's the NASDAQ here leading into this FOMC decision in 8 minutes. So again, the FOMC decision is in 8 minutes. The press conference is going to matter more than everything else, though. So, bro is going to hop on stage with no tie. That might be more shocking than anything here if he hops on stage with no tie. Maybe, my friend, maybe. We'll see. What color will Powell's tie be? Let me know in chat right now. I'm going to go with purple, guys. I'm going to stick with it. Consistent Powell. I'm going to go with a purple tie today. I have a red tie on. And so part of me wants him to wear a red tie because then we'll be tie brothers. But I'm going to go with purple tie. I'm going to stick with my same answer. It's never done me wrong yet. It hasn't done me wrong yet. Purple tie Powell is what I'm going with today. Let me know in chat what you guys think he'll have. I see blue, red tie, please, blue. Yeah, we'll see what we get today, guys. It'll be interesting.
Yeah, I mean, hi, JP, I guess, huh?
Yeah, goodbye, Jerome Powell. Welcome, Kevin Walsh. Kevin Walsh did get voted in. Or he got the necessary votes he needed earlier. But so now it's going to be heading to a full Senate vote after approved in the committee. So Senate Banking Committee approved him. Now it's going to go to a full Senate vote. So it's looking pretty likely. But here we go, guys. It is time. It is time. We have about 6 minutes left until the actual FOMC decision. John has betrayed us by wearing a red tie, bro. Why? Why is this bad? I can't wear a red tie anymore? Two ties like Marty McFly? Maybe. Maybe, what if he wears a bow tie? Shock everybody.
Bow ties either look really cool and classy or creepy.
Yeah. Yeah, the bow tie matters. The bow tie matters. I'm for let him wear a bow tie. I'd wear a bow tie if I was Powell. A purple bow tie, but I'd wear a bow tie.
I mean, how does the chat feel about Kevin Walsh? I mean, you guys optimistic or pessimistic? What do you guys see on the horizon?
Yeah. Do you guys like Walsh? Yes or no in chat right now. Do you like Walsh? Walsh.
And if possible, why and or why not?
Yeah, let me know.
Gold tie.
Indifference. It's not even a rate hike. What are we doing? Yeah, it's definitely not a rate hike. Good for crypto. Nope, don't like Walsh. I like Walsh my own socks. Sombrero. No tie, open shirt, and big belt buckle. Big glasses. Is dependent on someone. Listen, guys, 5 minutes left until the FOMC rate decision. It's pretty likely what we're going to do here today. So it's pretty likely what we're going to do. But The real question that matters here is, what does Jerome Powell say? What does Jerome Powell say during this FOMC decision? That's the big one. What does Jerome Powell say during this FOMC decision? Again, the FOMC decision and the statement is going to matter, like we said earlier. The statement matters. But what Powell says during the actual press conference is going to obviously matter more. I expect the statement, again, we have 4 minutes left, chat, 4 minutes. I expect the statement to stress inflation risks. I do expect the statement to stress inflation risks. But I don't expect it to stress it too much. And I expect it, and him, Jerome Powell, to be really wary of giving out a base case argument today, even if it's his last FOMC meeting. I don't think he's going to tell us. I don't think he's going to be like, yeah, we're looking at cutting rates in 2 meetings from now. I think he's going to say, hey, the Iran conflict skews things. We're going to wait and see, data dependent, meeting by meeting approach. It's almost certain what he's going to say, but we'll see. Again, the FOMC pauses rates decision is coming very soon in 3 minutes. And again, we're going to cover it all here. Hit that subscribe button, hit the notification bell. We appreciate it.
It's a base case.
What?
You said, I said, what is a base case? You said something about a base case.
Yeah, base case is just what their main plan is, like what it looks like right now. What their main decision will probably be. Yeah. The dot plot's not today, Raga. So the dot plot is not today. The dot plot happens every other meeting. So basically, every 12 weeks we get a dot plot. Last time we got the dot plot. Today we're not getting one. We'll get another one in June, is what it looks like. Again, guys, we have 2.5 minutes left. 2.5 minutes. Let's see. It's time.
Looks like looks like a lot of people are not a big fan of Walsh, or at least they're not optimistic going in.
Chat, you don't like Walsh? Yeah, sorry, Britt, say that again.
But I don't know enough to like him or dislike him. I was just curious what everybody else felt.
Yeah, I feel you. I get it. I like Walsh. No. Come on, Bitcoin going up today. Bitcoin might go up if Powell's more dovish than expected, which I do think is low odds. But Bitcoin also kind of follows macro markets. And so if macro markets end up moving up, that's what I expect Bitcoin and other cryptocurrencies to do, is move up. So if markets go up, I think Bitcoin will go up. Again, a lot of this is going to be dependent on what we get in regards to the earnings that we get after the closing bell today. So I like him. Indifference toward Walsh currently. During hearings, he said he wanted to do away with dot plots. No one likes Walsh. Walsh will be good. All right, guys, here we go. A minute left. It's time. It's time for the FOMC decision. Let's strap in. Let's get ready. We're going to pause rates, guys. We are going to pause rates. Again, moving from that, today is 429 right now. 429. So again, it's almost certain that we're going to pause rates. We're going to look at what the statement says really quickly here. We have 50 seconds. Hit the live button next to the play button. Put it in 2x speed. Here's the S&P 500 on the left. Let's see what happens. But time is now for this FOMC decision, press conference, and more. The time is now here, guys. 35 seconds left.
If we don't get
I am going to put it in sub-only mode here, guys. So we are going to throw this thing in sub-only mode. We appreciate it. Hit the subscribe button. Join us for the stream every time. And here we go. We have 20 seconds left. Hit the live button. Be prepared. The conference is not going to be for a while.
We don't get any rate cuts. I wonder how this affects like home price growth.
Yeah, here, 10 seconds, guys. 10 seconds. Yeah. 5, 4, 3, 2, 1. And here's the reaction right here. I mean, again, we paused rates, guys. I don't even have to look at this to tell you guys. We paused interest rates. So again, we did pause interest rates. You can tell because markets aren't moving. But our markets are starting to move down a little bit. Here we go. So we're going to check this. Okay, here's the statement. Recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low on average, and the unemployment rate has been little changed in recent months. Inflation is elevated. I told you guys he would say that, in part reflecting the recent increase in global energy prices. The committee seeks to achieve maximum return inflation of 2% over the long run. The developments in the Middle East are contributing to a high level of uncertainty about economic outlook. The committee is attentive to these risks to both sides of the dual mandate, and it's pausing rates, keeping them at the same rate. But yeah, again, I told you guys they were going to stress inflation. I told you guys before it happened, NASDAQ is reacting down. S&P is reacting negatively to this report. But I told you guys that they would be stressing inflation risks because of the Middle Eastern conflict. And if we look at this report, that's precisely what they say. They said developments in the Middle East are contributing to a high level of uncertainty. Inflation is elevated, in part reflecting the recent increases in global energy prices. This is very predictable. Guys, very predictable. The NASDAQ is down. The S&P is down. So the NASDAQ and the S&P are down. The FOMC has paused rates today. They did not change rates. We're still at where we were at rates at 3.5 to 3 3/4, 3.75. Rates are unchanged, and now attention is going to pivot towards the FOMC Jerome Powell speech. So again, this is going to be a critical Jerome Powell speech at 2:30. At 2:30. So a critical Jerome Powell speech at 2:30. Again, inflation shocks are kind of scaring the market right now. But 2:30 p.m., we have Powell speaking here. And that's going to really move markets here, chat. So again, we paused rates as expected. This is very predictable. We told you guys they were going to stress inflation. Again, recent indicators suggest that the economic activity has been expanding at a solid pace. Job gains are low. The unemployment rate is unchanged, or is little changed. Inflation is elevated, is the big key of this statement here, which is probably why markets are going down. Is that inflation is elevated in part reflecting the recent increases in global energy prices. But again, another thing I said is that he's going to be unwilling to commit to a path. He said developments in the Middle East are contributing to a high level of uncertainty about the economic outlook. Maybe I should have shorted this, guys.
I was going to ask, do you think this would have been a good time to short some stocks, or some, you know what I mean?
Yeah, I mean, I don't know, brother. I don't know, man. Maybe, but I think right now markets might just move in a range here. Let me trade this a little bit. I might actually trade this some. We got a little bit of time. NASDAQ is reacting like super negatively to this, but I do think this might be an overreaction to considering what he said. I mean, everybody should expect us to stress inflationary risks of everything going on right now because of the Iran conflict. I don't necessarily think that's a shocker here. And so I just bought this dip. We're going to add some more to this and see if the market moves in a choppy way leading into Jerome Powell. We'll see what happens, guys. Let's see if we go chop. Okay.
Yeah, what do you guys think? Should he, is this worth betting on?
Yeah, I think this might be a little bit of an overreaction. Everybody always, like inflation it's expected that Jerome Powell is going to stress inflationary risks right now, of course. Now, again, and here's the statement. He said inflation is elevated, reflecting recent global energy prices, which is pretty obvious. Luckily, we have like $300 or $400 in profit on the day on this account. So even if we go down, we will cut it and get out if it turns against me here. But I do want to give it some time to chop. I think maybe we move back up from this meeting. Again, what color will Powell's tie be today, guys? What color will Powell's tie be? I don't know. I'm going to go with purple. It hasn't done me wrong yet. I don't think it's going to do me wrong again.
Purple sounds nice and neutral.
Yeah, purple seems reasonable. I mean, he's that's the one he's mainly worn, is purple. But again, guys, here we go. We're at 27,200 here on the NASDAQ. 27,200. Let's see if the market jumps.
What level would you expect us to bump back up at?
I'm looking at the 200 exponential at 227 and the volume weighted average price at 232. So here's what I'm looking at. So again, orange, green, red, aqua, blue, yellow, purple, teal.
If it does drop below those two indicators, would you add to your? I mean, it looks like it's bumping up now, but would you add to your position?
No, I'm not adding on the downside. I'm not going to add to a losing trade. I'd rather add to a winning trade if it goes in my favor versus losing trade. If it's a losing trade, I'm just going to keep it pretty small and just let it kind of ride. Yeah, he wears purple most of the time. It's either dark purple or light purple. I'm not going to get into what the names are of that stuff, but he's about his purple, guys. He likes his purple. He's about it. You know. And so I don't expect him to pivot away from purple, even if it's his last FOMC meeting. All right, guys, we do have the actual press conference coming up, which is going to be the biggest thing. Right, the actual press conference for Jerome Powell is going to be the biggest thing, of course. He stressed inflation, which is what we expected. We told you guys he would. And will he give up his board seat is going to be the other focal point of today's stream. Will Jerome Powell give up his board seat or not?
I don't think he will.
Yeah, it's hard to tell, really. Again, it's just really tough to tell. Maybe he does.
I'm just making a guess.
Markets are pricing, and I think it's like a 40% chance he does before the end of this month. So a 40% chance Jerome Powell gives up his board seat by the end of this month. Again, rates are unchanged.
Do it today.
Yeah, no, I don't think so either. Maybe he announces it today, maybe he doesn't. But if he does, we should get volatility from it. So that's, again, I would pay attention to this, guys. If he does, we're going to get volatility from this. If he gives up his board seat today, which is a big if. A big if. And bear with me. I got to find the chat here. Hold on. There it is. Yeah, so I'm kind of almost green here on this. Yeah, here's the statement. We'll put this up on screen. We are red in this trade, so I think I'm just going to stay in this. Markets are kind of pricing it in bearish, but maybe they're pricing in weaker data here. This is a big support level too, so I want to see if we pop, but if we break under these levels, I'll cut this and get out and not worry about it. And we're still up very nicely on this trade. There we go. Look at this jump here. Whoa. I'm going to take a piece of that off. This looks news driven, guys. This looks catalyst driven here. Hold on. Let's see what happens. Something just happened. Yeah, I don't see anything.
What the heck?
I ended up cutting most of this off here, so we're just going to lock in that profit here. And then maybe give it more time. But we just got a big jump here, a big pop. The statement didn't say anything that would move markets in any big way. Again, it said inflation is elevated, in part reflecting the rise in global energy prices. So,
yeah, I'm not seeing anything either.
Yeah, I don't see anything either that would pop this market like this. So, 6 Iranian crew members of Iranian flag container ship Tuska are freed after seizure by U.S. 22 Iranians are still held, according to Tasnim. Maybe that's it. I'm gonna get out of this here. We got into a trade and I think we made money actually, but. Yeah, we did make money on that trade, actually. We took some profit on that big pop. But, man, what a pop and then a drop back down here. Look at the S&P. Look at the NASDAQ here. NASDAQ is at 27,100s. The FOMC press conference is going to be very soon here, guys, very soon. So, let's get this stream ready.
All right. Oh, you put it in sub-only mode already. Okay.
Yeah, we're in sub-only mode. Yeah, we already have.
Is that true?
What?
Someone says Hexeth is also live.
Yeah, they're voting on something with Hexeth. I can't remember exactly what they're voting on with him, but it's something.
I thought he might have said something to affect markets. You know?
Yeah. No, I think. I don't think so. I think
Bitcoin crashed. How much?
Yeah, I mean the markets are now coming down here. Look at the S&P and look at the NASDAQ here. So the markets are dropping. I mean, guys, we already expected this meeting to be, we already expected him to be hawkish. We expected all of this here is, I guess, the point. Let's do a timer for the actual FOMC. But yeah, NASDAQ is now technically red on the day. The S&P is now technically red as well. All right, guys. Yeah, we're getting this ready so we can actually watch this. So just bear with me. Pun intended. Or is it? Here, we'll put this up right here. Give you guys enough room to watch it live. We can put like the NASDAQ or something up right here. Let's see what we get. Yeah, we can put like the NASDAQ or the S&P up. Maybe the NASDAQ, S&P, and Bitcoin up. All right, guys, here we go. Yeah, we got the timer going live. I'm looking at other breaking news here, but I don't really see anything yet.
Yeah, I was looking for something too, and can't find anything.
Yeah, I'm looking at Brent crude prices currently at 118.40s right now. 118.40s for Brent crude.
On the uptick, right?
What?
I mean, still on the uptick, still rising.
Yeah, Brent's still up there. Let's see if I can put maybe like the S&P and Bitcoin up here. Yeah, look at Bitcoin, guys. Bitcoin falling down to 75K right now.
How's the tech sector overall responding? Like, what are like Meta and Google and all those doing? I mean, I know they have earnings reports or whatever coming out, but
yeah, looking at Bitcoin, Bitcoin's down to 75K. Google up to 340s. So they're not really reacting too much to this. I didn't expect them to. I mean, everybody knows we're going to pause. It's Jerome Powell's last FOMC meeting, so all the attention is going to be on what Jerome Powell says during the press conference today. So most of the big major cap stocks are not going to move until after the closing bell today. So most of the major ones are just not going to be pushing. They're not going to be moving here. So Microsoft's flat, Bitcoin's down, SPY is down. Here we go. And we'll see what the Fed's got to say today.
do you think most of the Fed stuff is baked in, though, you said?
Yeah, I think a lot of it is. I think most people already expect the Fed to pause rates today. I mean, everybody did. Nobody really thought we were going to do anything else except for the guy that thought we would raise rates twice this year. But that's just not happening. And so now the attention is just going to pivot to what Jerome Powell's got to say regarding everything.
Yeah.
So we'll put the timer up. We have 17 minutes right here. If you look at this timer, we have 17 minutes until this meeting. And this meeting's important, guys. This meeting's important. We'll see what we got to say here. But 17 minutes.
Didn't you say they got said we'd raise rate by like 50 points?
Yeah, I never believed him though. Like, you gotta understand, he's just saying things.
I think he's just trying to get a reaction, I guess.
Yeah, that's what it is. He's just saying things. All right, guys. So I have the SPY up. What is this right here? I'll put gold up maybe. Let's see what gold's doing. I'm assuming gold's dropping some with the rest of the market here. Gold is down to 45s.
Is it usually slower to drop? I mean, in reaction, or does it pretty much crack quickly?
They say shorts take the elevator, longs take the stairs. And so I think that is kind of the theme. Like, a lot of the time shorts will drop really quickly, but longs take a little bit, pun intended, longer. I'm gonna make this a lot larger here. Yeah, I'm gonna make this a lot larger so we can actually watch this cleanly here. There we go. That's a little bit better.
Explain to me why crude oil is $106 to $107 a barrel, but we just broke a record of 6 million barrels a day.
Yeah, I mean, market doesn't make sense half the time. Yeah,
it doesn't. And I mean, honestly, I think you probably just have to take the conflict into account. That has a lot to do with that kind of stuff.
Yeah, and Chad, I have a question for you guys ahead of this meeting. Is it time to buy Bitcoin? Is it time to buy Bitcoin right now? What do you guys think? Is it time?
Is it still trending down?
Bitcoin? Yeah, it's down on the day. Bitcoin is, here's the S&P, here's Bitcoin right here. Bitcoin's down to 75,380s. It was already red on the day, but the meeting kind of tanked it more. This is Bitcoin right here. So Bitcoin's already down.
Okay.
I see a lot of people saying, no, it's not time to buy Bitcoin. But yeah, again, it's definitely a...
So do you guys think it's going to keep falling, chat? Or you just think it's just too high to get into, period?
Yeah, NVIDIA is all the way down at 207s right now. 207, 208s. So
down from, what was it, 214 earlier?
Yeah, it was 214s at the opening bell today, basically. 214s. So Bitcoin's dropping. We're gonna look at what.
Fall.
Yeah. And here's a. Again, here's the Bitcoin right here. If you look at it, so it's right at 75,000. This Bitcoin right here.
Wouldn't buy Bitcoin with your wallet and me pushing. We'll never go. Never go below 56K. Bounce back at 70K.
Honestly, I'm genuinely surprised at how much the market has moved down from this report. I thought everybody already knew Powell was going to stress inflation fears. Of course he is. It's the middle of the Iran conflict. Oil's at 107s right now. So of course he's going to stress inflation fears. What are people thinking? Thinking he's not going to? What do they think he's going to say? Inflation's all lolly jolly and everything's fine? Of course not. He's going to say, hey, inflation's elevated. We got the Iran conflict. That goes for what he wants anyway. He wants a, he wants a neutral Fed, really. So,
I mean, could it be like an orchestrated drop? I mean,
no, I think maybe algorithms and traders just assume they're. You got to understand, the Fed decision is so watched. It's so critical for markets a lot of the time that attention just naturally pivots towards it. Attention just naturally pivots towards it. Now,
someone asked if you could lower my volume. Am I loud, you guys?
Yeah, I tried to turn both of our volumes up today. Washed, neutral. Bye. Is Brit too loud? Are you drinking grain alcohol? No, my wife's against plastics. So all the water we drink is in these things. One time I brought this to jiu-jitsu and dropped it on the floor and it shattered. Never again. No, you're both fine. You're good, I think. Okay. He's louder than me. Is he really? I guess I just have to turn myself up a little bit. There we go. I'm turning myself up right now. Let me know if that's good. This is moonshine. Moonshine trading coming soon. Brent crude has dropped though. So speaking of Brent is down at 118.80s right now. So Brent crude was all the way up to almost 120s. Here we go though, guys. It's time. We have 13 minutes left until Powell speaks. 13 minutes. Let's see what we get. Will Powell be hawkish or dovish? We did a poll earlier today. Let's take a look at that poll now with only 12 minutes left. 64% think he's going to be hawkish. And I agree. I think if there's this, I should have given a neutral option because I think Powell is very neutral. But if you're going to make a bet on dove or hawk, I think you got to go hawk. I don't think why would Powell be dovish? I'm not saying the outlook in terms of Fed decisions is not going to be more dovish after Powell. What I'm saying is that I don't think Powell's going to be dovish today. If you think Powell's going to be dovish, let me know your argument in chat. Let me know your argument in chat. Will Powell be dovish? I don't think he will, but he will be duckish. Okay. I'm sorry about this song, guys. All right.
I mean, wouldn't it be pretty uncommon for him to break trend? I mean, isn't he historically pretty hawkish?
He's not hawkish. He cut rates 3 times last year under Trump. He cut rates 3 times the year before under Biden. And so generally speaking, they cut rates towards the end of the year. They paused at the beginning of the year unless we got some extenuating circumstances going on like 2020 or beyond. So I would say he's more balanced. A lot of people are going to say he's more hawkish.
But I mean, could political bias just be entering into that, you think?
Yeah, no, 100%. There's a lot of political bias on both sides. I'm pretty neutral on all this stuff. Generally, he looks like he makes reasonable decisions in the Federal Reserve. I don't know about the Fed building and all that stuff. Like, that's outside of my realm. Beehives are sending it back, is what I'm saying. But outside of the Fed building renovations, which again I don't know anything about, he seems relatively balanced. People are really critical of him, and that's a tough job. Did y'all like Powell as FOMC chairman, guys? Did you like Powell as FOMC chairman? Let me know in chat. Put yes or no in chat right now. We have 11 minutes left. Was Powell a good FOMC chair? Let me know.
I think just like with anything, I mean, whether you're talking about this or, sports, it's really easy to armchair quarterback,
Yeah, for sure. No, 100%.
think people don't take into account the stress of a high profile job like that.
Right. I see yes, mid-tier, nope, yes, yeah, they're all crooks, no, loved them. It's all manipulated, so it doesn't matter. He's a can kicker. They've all got diarrhea of the mouth. Yes, he did a good job in my opinion. Yes, they just dropped a lawsuit on him. Yes, QE was a nightmare for 90% of people. Powell did fine. Every complaint I've seen is Congress's fault. Yeah, let's do a poll here. I think we've got some interesting answers here. Let's do a poll. Participate in the poll here, guys. I do expect you to participate. Was Jerome Powell a good FOMC chairman? Yes or no? Yes, no, or mid? Yeah. Vote on the poll right now. Poll is now live. Was Jerome Powell a good FOMC chairman? Yes, no, or mid? Anyone going against Trump is a good person, leader, chair. He was the Fed chair of all time. He was the greatest Fed chairman of all time, maybe. I mean, you know. I don't know about that. Chair of all time, huh? Yeah, I don't know about that. He was chair for a long time, but I don't know about that. He's a good economist. Yeah, I mean, he was a investment banker prior to being chairman. So 9 minutes, chat. 9 minutes. Hit the like button. Hit the subscribe button. Do it now. We appreciate it, and it's time. It's time for the FOMC decision.
Do it now. I can't actually. That was terrible. But I mean, so what's the length of his tenure uncommon? Then
well, he got appointed. Let me see. What is the average FOMC term? FOMC chair term or time frame? Approximately 8 years is the average time span. And just to put this into perspective, Jerome Powell has been chairman since 2018, so he's about 8 years. He's about average in terms of time.
Okay.
I'm not streaming QCOM earnings. Yeah, I'm not going to stream QCOM earnings. We're going to stream all earnings, actually, after the closing bell. We're going to stream Microsoft, Amazon, Meta, Google earnings after the closing bell for sure. And so, yeah, we will be streaming that stuff live. But get ready, guys. Here we go. We have very short amount of time. We have 8 minutes left. 8 minutes until this meeting here. Looking at our poll, we did the vote. I wanted to see where people stood on this. We did a poll here regarding Jerome Powell. And it looks like most people think Jerome Powell is a good chairman. Most people. Is it everybody? No. But most people think Jerome Powell was a decent chairman. The poll is currently 60% yes, 26% no, and 14% middle of the road. So yeah, I mean, so most people did see him as a good chairman. But yeah, now we will see what he's got to say for his last hurrah, his last speech. We have 6 minutes left. 6 minutes. So we have 6 minutes left until the FOMC. Yeah, we have 6 minutes left.
I don't think we can expect really any surprises from him. Do you?
I mean, I think he's gonna be more hawkish than dovish. I don't know if that's necessarily a surprise, though. I think most people expect him to be hawkish. And I mean, naturally, I mean, most people are just gonna assume he's hawkish right now. So, yeah, most people are gonna expect him to be pretty hawkish, and that's not a shocker. You know, that Jerome Powell is going to be hawkish. Again, I expect one of the big aspects of this is going to be, does he comment on whether he's giving up his board seat? Yeah, the president is speaking right now. I do see that. It could be influencing markets, but we're going to be covering the Jerome Powell speech. So, you guys ready?
Yep, ready as I'll ever be.
5 minutes. We got 5 minutes here. It's time. Big earnings today, too, after the bell, man. It could get spicy. We'll see what happens. But big earnings after the closing bell today. Apple earnings are on Thursday. So I see the chat asking. Apple earnings are on Thursday. Here we go. We have 5 minutes left until the full FOMC speech. 5 minutes. And Britt, when we start this, I'm going to hang up on you, and then we can join back after the speech and decisions are over. All right? So,
all right. My feelings will be a little hurt, but I think I'll be okay.
Well, I mean, that was the goal of me hanging up on you. Is going to be, I hope it just kind of Britt a little bit, you know, make him question.
Just do it now. Surprise me, you know?
Right. Yeah. Hey, Britt. So, what do you think in terms of his board seat question? What do you think?
Like,
hang up on Britt. Britt, you're hung up on. Okay, I'm just joking. All right, sorry. I just wanted to hang up on you after I asked you an important question. The spy is coming down here. The spy is coming down here.
Man, that hurt my feelings.
I know, that was the goal. Spy is down to 709s. 709s.
I can't hear you. You're very, like, far away or something.
Can you hear me, guys? I think y'all can.
Now I can. Now I can.
All right, guys, here we go. We got the last Jerome Powell speech very soon. Very soon. After that, we got
a question just to hang up on me.
I really did. I was like, what can I ask Britt? And let me hang up on him. I was like, I think I can ask him this.
Bad friend.
I know, dude. Listen, that's what I'm here for, bro. If you don't mess with your friends, what are you really doing in life? Like, all right, guys. Spy's coming down, though. Look at the SPY down to 709s right now on the SPY. 709s. Weakness in the SPY. Weakness in gold. Trump is speaking right now. But here we go. We got the FOMC press conference very, very soon. Very, very soon. Uncle John? I am an uncle, actually. Yeah, the last few months, Trump speaks when Powell's about to come on. Yeah.
That might have been an Uncle Roger comparison. I don't know if you know who that is.
It might have been. I don't know. Yeah. All right, guys. SPY at 709s. 709s. Gold all the way down to 45s. Bitcoin did not react well to this. Even though, guys, look, I don't know why Bitcoin... Who did not think they would stress inflation fears in the statement? You know, Bitcoin falls like right here, right at 2 p.m. when the statement comes out. Who thought they weren't going to stress inflation fears? I told you this is what they were going to do. I even made a short about it. I do expect them to stress the inflationary aspects of the Iran conflict. That's what I expect him to say today as well. I don't think he's going to give a base case here, guys. And we have 2 minutes left. But I don't think he's going to give a base case. What I expect him to do today is stress the inflationary aspects of the Iran conflict and the unknown path for rates because of it. I think he's going to say, we don't know where rates are going because we don't know where inflation's going. And because of that, we're going to take it meeting by meeting, data-dependent approach. We're going to focus on both sides of the dual mandate and pause rates. And that's what I think Jerome Powell is going to say today. Again, the other key words here, guys. Inflation. Obviously, unemployment. Iran. Fed board seat, Fed governor. Fed board seat, Fed governor. Those 4 talking points are going to rule where markets go from this reaction to the Fed meeting today, guys. So those are the big 3 or 4 talking points I would focus on if I were you. If I were you guys, I would focus on those talking points. So yeah, just be careful.
So
be careful.
I know that Walsh has always has been critical of quantitative easing, but apparently he's also critical of the Fed's $6 trillion balance sheet. And feels that they've distorted markets. It's distorted markets, fueled inequality, and eroded central bank independence. I mean,
yeah, but that is QE.
Kind of wonder about. Yeah, no, I wonder about the central bank. I mean, I wonder if it actually has eroded central bank independence. Was really the only part that I was focusing on. I was just reading out the whole thing.
No, you're good. Okay, guys. So listen, the FOMC decision is in 1 minute. 1 minute. So it is time. We are here. It's the moment everybody's been waiting for. We're still on a hold music. I'm going to pause, Britt. Actually, Britt, I'm going to hang up with you right now. All right.
Okay.
All right, dude. All right, I'm going to mute the music. I'm going to turn the music off. We're going to prepare for this. I have a couple different examples of this FOMC thing live. They haven't really updated it yet, but we have the music paused. I'm looking at both sides of this here. We're going to see which one goes first. But yeah, we're ready here. Here we go, guys. 10 seconds. 10 seconds. Okay, here we go. What color will this tie be? But here we go. Waiting for Powell. Powell hasn't walked out yet, but we are waiting for him now. No Powell yet. Where's Powell? Here we go. What color will his Powell be? What color will his tie be? I'm going purple. Where is Powell? I do not see him. Powell's rarely late here, guys. He's kind of late. Waiting for Powell. Hit the live button next to the play button. Put it in 2x speed. Powell's kind of late here, guys. Where's Jerome Powell? NASDAQ going down a little bit as we speak here. SPY going down. Here's the SPY right here above me. You can see the SPY dropping here as we wait for Powell to step in here. We don't see him. There he is.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Walsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Walsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the Fomc as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have I think, left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert, and monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate, and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut, that number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation is 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So The majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, it's a much closer thing on the committee than it was in March, and that makes all the sense in the world, it seems to me.
Claire.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seem rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools?
So I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil Owen with Axios. Can you tell us if you've been in touch with incoming Chairman Walsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market, and should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out, and it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world. That had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates. And for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
Just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you want to make them in a way that will be sustained and continue to make sense, and not something you need to take back, fairly quickly. So I think we just a group of us, including me, didn't feel like we needed to be in a hurry on that. That markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got three dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the Fomc, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Walsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Howard.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can... Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do. The shadow chair thing. No, I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation problem?
Those prospects are real. Remember, though, they're real, and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral, or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable, because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know till we know. So fortunately, we're in a good place to wait and let things develop.
Thank you.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting, as opposed to the ones with SEPs. Can you talk about why you see that as a net positive?
So we always said, when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting, and sometimes between meetings, and doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to I try to deliver a message on behalf of the committee, rather than 18 other people going out and delivering their message, and it's going to be all over the place, because we do, thankfully, have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented any action on those changes? So
I'm not going to go into the real small specifics, but what we found very quickly was that making really large changes, for example, to the dot plot or the SEP, we couldn't come up with anything that had really broad support on the committee. And so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something. Like I said, I think every new chair is going to look at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast, and that's because we have a 19-person committee, and you try to do that at the board, that's hard, at the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now. So it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s, the effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. The effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. And those hikes may continue to happen. And other things are going to start to reflect airline fares I've mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it between 3% and 4%. We're a little north of 3.5%, so that's well in the range of what I would consider a reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen 4 dissents now since October of 1992, are you handing off a divided Fed?
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good, and we're in an unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And what do? It's the central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those 2 goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. you got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. People are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. And I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Walsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not, the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
And the message it sends to President Trump by staying on?
I'll stand on what I said earlier.
Victoria. Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law. But it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks that would be good to repurpose those to serve other purposes, but that's dragging us into politics and into fiscal policy. So we've resisted that.
Well, and maybe another way of asking it, too, is do you think that Fed independence is as strong now as when you became chair? And if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about, and we've had to do that, and we've been successful so far. But that's not over. None of that is concluded yet, and it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it. And I'd like to think that, I'd like to think we can get out of that era and go back to respecting, what the law says and what custom has been, which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about? So
I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all I'll say. And and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris Waller is particularly passionate about that. Of course, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing he touched on was the idea of removing reserve bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine. Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say that that's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them really since the COVID reopening?
We're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening, which keep driving up costs, and the best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that, but we try to get there over time in a way that does the least damage possible, and our commitment to that is never-ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of a momentum in the economy, is actually higher than that. So that's a positive thing. If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's in a sense, the labor market is in balance, but it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good. Inflation is the thing we need to work on, and it's partly tariffs, which we think that inflation should subside over the course of this year, because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly. And we'll just have to see how that works out. In the meantime, we think our policy stance is in a good place for us to hold and wait developments.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement. And you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that, the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think, there's a lot of signaling going on when you change guidance like that. And so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it. And of course, we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But there was a difference over whether to do it at this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And you just said moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, a high-profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. You've made many tough decisions in your time at the Fed, and as your time as chair comes to a close and you think about your tenure and perhaps your legacy, are there any decisions that stand out as ones that you're particularly proud of? And are there any that, with the benefit of hindsight, you would take a mulligan on?
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, all of us together have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. It's been very challenging because we've been in a situation of supply shocks really for 6 years. And that's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management. And there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging, and we've tried to do our very best through these really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after literally centuries of experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic, inflation everywhere in the world, and now we have inflation that had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the tariff shock as well. So, but what I would say to the general public is that's the backstory, is that don't think about it, an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore political considerations, completely ignore them. This isn't bipartisan, this is nonpartisan. So we want to just work directly for the American people doing these things. We don't think, I want to do this because the president says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe in that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case. It's people do get it, that this is our commitment and that we will achieve it, and it's priced in. If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
Okay, we'll go to Richard for the last question.
Thank you, Chair Powell. Richard Escobedo with CBS News. We talked a lot about gasoline prices and even you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't see it in spending yet. You really don't. I mean, as one of your colleagues said, the economy has been resilient. It really has. Not just this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock, and consumers are still spending, and that's what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently. People are still spending, and how long can that go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now, we don't actually see much slowdown yet, and certainly none from this. But you think logically you will, because people have a certain amount of money to spend. If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models that we use to calculate inflation. So they're just parts. You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices and that kind of thing. So it's there. The effects are not that big yet. We're a huge economy. The import sector is only 10% of the economy, so we're not like a European country where 50% of the external of GDP is in the external sector. We're also, as I mentioned, we're an oil exporter, so we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone. I won't see you next time.
All right, guys. So that is Jerome Powell's last FOMC meeting, but stick around. There's more. We have an absolutely insane lineup of earnings going live in about, 25 minutes from now? So we do have an absolutely ridiculous earnings release coming out pretty soon. I would say it was pretty neutral for Jerome Powell. Markets did digest it as slightly green, but if we look at yields originally spiked, which shows hawkish sentiment by most people from this report. I would say the shocking thing is Jerome Powell's going to stay on as Fed governor. He's going to keep his votes. He's going to stay on. And then they even asked him, they said, hey, are you staying on to kind of keep some checks and balances here against basically the ultra doves that might be stepping in with Walsh? And he essentially said, yes, they are doing that. So Jerome Powell will be staying on as Fed governor. Should be really interesting. But again, guys, we got a lot of stuff going on right now. We have the big earnings release going on right now. Let me get Britt back in here, see what Britt had to say. But yeah, interesting, guys, for sure. Very interesting. Hold on one second. Let me call him. Sorry, I know that was really loud. There we go. What's up, Britt? How you doing, dude?
What's up?
All right, so the Fed meeting is over. NASDAQ's pushing up. We're at 27,320 here. Yeah, I'm sorry if that was loud. I'm sure that was kind of loud for everybody at home. But again, do you guys think, I guess the overarching point is, do you guys think this was bullish or bearish? Was this bullish or bearish? Is Jerome Powell staying on as Fed governor bullish or bearish? I think it's definitely a little bit more hawkish than it would be if he left and Trump appointed a new guy as a more friendly dove, I should say. But Jerome Powell staying on as Fed governor, I think, is a more hawkish outlook. But markets are pushing up. Let's take a look at what crypto is doing right now. Bitcoin has fallen on the news of Jerome Powell staying on as Fed governor. And so what we do see is we see Bitcoin dumping down. Remember, Bitcoin wants easing. And so Jerome Powell staying on as Fed governor is not the most easing thing. It's not the best thing for him, essentially, for Bitcoin. Because if Bitcoin wants easing, Jerome Powell sitting on the board still is definitely a more hawkish thing. What do you think, Britt?
I mean, I tend to agree with you.
Yeah. So, and as long as you agree with me, Britt, that's good.
Based on some of the research we did earlier and some of the things that he said.
Yeah, what I'm surprised at is that we have Bitcoin reacting negatively here. But the market itself, if we take a look at the market's pushing up. Gold's even up a little bit here. And so it's kind of an interesting market where, we're not really going down as much as you might think from Jerome Powell staying on in a more hawkish sentiment. I know some people are going to want Jerome Powell to stay on. And I get it. I really do. I understand.
Well, it might be because they know who's coming on to replace him, though,
Right. Well, Walsh is going to be dovish, Walsh is going to be dovish. And so it's not really like a crazy thing that I'm honestly surprised Powell's staying on like this. It's not really what you typically see, but really like what we're seeing now is this isn't really typical in general, like it's not really it's kind of an interesting landscape of monetary policy in the first place. We got the Iran conflict going on. We have everything else with inflation rising with the Fed and all that stuff. And so, yeah, I mean, markets like it. Bitcoin does not, which is interesting. I would assume Bitcoin and markets would go the same way. I would assume markets wanted easing as well, just like Bitcoin. But again, it's kind of showing not necessarily the case here. Again, though, guys, we are about to pivot to our earnings stream. These earnings come out at 4 p.m. Eastern Standard Time, and they are going to wildly influence markets as well. And so you just want to be wary of these earnings releases about to go live. Understand we might have some volatility from all this stuff here. So we'll see. And yeah, again, we're going to give me 1 second. We're going to transfer on over there. I guess, are you bullish? Are you bullish or bearish on these earnings today? I guess it's probably one of the big questions we should ask. Are you bullish or bearish from this? You're bullish on today's earnings?
Yeah, why not?
That's fair. I mean, I'll allow it. I'll allow it. Bullish or bearish in chat right now? Yeah, can y'all hear Brit? I can hear the noise. There's some noise coming from it, but it's all right.
Yeah, I mean, only thing I did was unmute my mic. So.
Yeah. No, you're all right. All right, so let's get this stream going. What time is it right now? It is 2:30. All right, guys. So again, as soon as I close this stream, it's going to bring you to our earnings stream for Microsoft, Meta, Amazon earnings. These earnings drop in 30 minutes. So be ready. We are about to go over to that stream right now. As soon as I close this stream, we're immediately going to bring you to the next stream. And so, yeah. Once we get to the new stream, of course, hit the subscribe button, hit the notification bell. We appreciate it. And yeah, we'll see what we get here. Guys, be safe. I'll see you guys in just a second. Again, if it doesn't bring you there for whatever reason, here is the new stream code. Here is the new stream link. Let me make sure we're good here. Yeah, if it doesn't bring you there for whatever reason, here is the next stream. Right here. I'll put it up in chat. And yeah, we'll see what we get. There it is right there. Bearish, bearish, bearish. Yeah. All right, guys. I'll see you guys over there. I know we're still live. I'm coming. I'm slacking here a little bit today. All right, I got it.